Hey guys, welcome back. Today I'll be sharing why I did not sell a single Tesla share, despite knowing in advance about market correction, and I even made 2 videos about market correction coming. If you're interested in them, I'll link it up here and down below. I'll be sharing my personal opinion, just so that you guys can see how I think. You don't have to agree with me because everyone has different time horizons when it comes to investing. Some people need the money to be out of the market in 1 or 2 years to buy their house, fund for their marriage and other form of expenses. Everybody have different needs and everyone have different circumstances. Personally for myself, I have a very long-term investment horizon for Tesla. I don't plan to sell Tesla shares in the next 10 to 15 years. So why did I not sell a single Tesla share despite foreseeing a strong market weakness? Now, the market is panicking because everyone is afraid of interest rates increasing crazily. When interest rates increase, this will cause money supply to shrink, there is lower liquidity for the economy, and this will cause spillover effect. US national debt is $29 trillion. A 1% increase in interest rates is going to cost taxpayer $290 billion or one Elon Musk to pay for the interest alone. A 3.5% interest rate will cost taxpayers more than $1 trillion or 3.5 Elon to pay the interest to the $29 trillion debt. Now let's think in terms of the US perspective. If you owe yourself so much money, will you increase your own interest rate to make yourself pay so much in interest? The answer is probably no. So the first reason I did not sell is because I don't think we are going back to the 8 to 10% interest environment. I think the probability of that happening is less than 5%. In fact, I would even argue that this period is probably the best time to load up on Tesla shares, because the effects are already priced in and Tesla is oversold because of fear. The second reason of me not selling a single share of Tesla is because I believe time in the market beats timing the market. Ironically, I started learning technical analysis when I was 19. It is a habit of mine to time in and out of the market whenever I see market weakness. But after learning about this, my whole perspective has changed, and I think that timing the market is actually the reason why many people don't do well in investing. Let's take a look at this article about time in the market versus timing the market. Looking back over the 20-year period from January 1st, 1999 to December 31st, 2018, if you miss the top 10 best days in the stock market, your overall return will be cut in half. That is a significant difference for only 10 days over 2 decades. In this period, we went through 2 major crashes, dot-com bubble and 2008 financial crisis. If you do not miss a day and stay invested throughout these 20 years in S&P 500, you get to compound 5.62% every year. However, if you just miss 10 best trading days, your return gets cut in half. If you miss just 20 best trading days, you actually lose money. You lose negative 0.33% over 20 years. And if you were to lose 60 best trading days, you lose 7.41% every year for 20 years. Now, let me put this into perspective. There are 7,300 days in 20 years. 60 days out of 7,300 days is only 0.8%. It is much easier to be just fully invested than timing in and out of the markets. It is also lesser stress too. This article proves that time in the market is a more logical strategy to deploy as compared to timing the market. When you time the market, you have to time twice. Time the exit and you time the entry. There are also brokerage fees involved. Brokers will want to encourage you to trade as often as you can. What I personally think is a better strategy than time in the market for Tesla stocks is being very disciplined in timing the market. I only time the market when it is very obvious. For example, the Hertz announcement pushed Tesla to 1 trillion market cap and then 1.2 trillion market cap. In a scenario like this, I will consider selling 10 to 20% of my Tesla holdings and keeping 80 to 90% of my holding. When there is an obvious market weakness like interest rate hikes, what we can do is to hedge our position. You can do so by shorting overvalued stocks and invest in your highest conviction stock. When the market crashes as a whole, both the stocks drop. Your shorts will be in profit and you take that profit and buy the highest conviction stock. If the market did not crash and surge instead, you are market neutral because your long position is profiting and your short position is losing money. So other than the stocks is overhyped or the macro environment is doing badly, I will not do anything and I just buy as much Tesla shares and let time do its thing. And of course, the last reason why I did not sell a single Tesla share despite knowing market correction is coming is because I believe Tesla will be the biggest company. There is still a lot of upside for this company. In fact, I believe 10x is not a problem at all if they continue to execute well. The government have made it clear and will incentivize EV makers. The gross profit margin is already 30% for Tesla without any incentive. There are still so many ICE cars to be replaced, so many superchargers needed to be built, so many vertical integration of manufacturing the same product with different use case. Tesla is the most innovative company right now, and innovation is what drives great products. I can go on and on, but let's not go there in this video. If you are interested, I'll link a video up here and down below on Tesla's real dominance. In my next video, I'll continue to show why Tesla plays a super important role in our future. So please stay tuned. Do help me out by liking this video, subscribe to my channel if you haven't. Help me out and let's get this channel to 1.5k subs. Thank you and I'll see you soon.